Hello, this is Ken Tomko with T2 Asset Management doing our monthly review of what's going on in the markets, what we're looking at for some of our portfolios. Obviously, it's, as always, these videos are not for trading purposes, they're for education information only. I always start here with the weekly chart of the S&P 500. This goes back to 2019 here on the left side. And you see the 22 bear market that we had as the Fed started bringing up the interest rates. And now, look, we're off to the races here again and up to we had reached new all-time highs. Market had pulled back in recent weeks a little bit, just to some support there. And this often happens as you break a high, it'll kind of come back and retest it and then move on. And that's what we're seeing here on the weekly trend. It's accelerating into a even steeper uptrend as we go. So for long-term money, core of your portfolio, yeah, the market's telling you to be invested here. If we go down here into a little bit smaller detail, let me hide this video panel here. 1 second. Hide this floating meeting controls. There we go. If we go down here into little the daily chart, you can see here the retest that we had over the last couple of weeks there, and it come back to some support that we'd had here in early February. It's not showing on this chart. This also was the 100-day moving average on the market. Came down, did a retest, started to bounce up, retested that again, and off to the races again. So everything's looking healthy. Normal markets, when you get this kind of uninterrupted rally here for 6 months, at some point they're going to test moving lower. It did so, and we're moving back. So everything that I'm seeing so far from the weekly, from the daily, everything's saying that the market trend is still up to be invested. And if we go down here and look at a little smaller detail, this is the 2-hour chart, and this chart will show me about the last 6 months trading, so you can see the big rally that we had up. April broke and started testing lower, and so this is in recent weeks here. Then it tried a couple of times to get back below 5,000, as you can see, and it just didn't. So as we re-engaged here, put capital back to work and are invested, basically all our charts right now are still saying up. Anything can happen, and that can change in a heartbeat, I guess. But really, when you listen to what the market's telling you, it's saying right now that everything's moving into an uptrend and is in an uptrend. If we look here at some of the market internals, you see here this is the percentage of the S&P 500 that's in an uptrend. And as we move down, it came down about 48, but in recent weeks, it's moving up. So about 63% of the S&P right now is in an uptrend. Below that, here, this is the advanced decline line on the New York Stock Exchange. Nothing really to see there. In fact, when the market decline had come there in April, that didn't even really move that much. And so it did very much look like just a small, slight retest or people kind of moving their portfolios around. Finally, at the bottom here, this is the VIX, the volatility index. This is, shows what people are paying for protective puts options against their portfolio. They're worried about a big downtrend coming, and as you can see, that is just not happening. I mean, we're down at 12 here. These are numbers that you can see when the market's rallying. This is where you'd want to see the VIX, and that is where it is now. So, not seeing anything that's concerning at the moment. Big on the mind of the markets, obviously, when the 22 bear market started happening. That was really from this. This is the interest rate on the 10-year U.S. Treasury bond, and you can see we have kind of settled into an area here, almost in the 4% range, as the Fed decides what their next move is going to be. But it certainly does look like, at the least they're done tightening, raising interest rates to cut off inflation. So how quickly they can move to cut, that's up in the air, but it certainly seems like the cycle of us moving into higher interest rates has closed, at least for now. We look at some of the economic indicators we have here, the GDP growth rate. That's a little concerning. The latest GDP print has slowed down a bit from the prior. As we had it at 3.4, we're at 1.6. But you can get that for a quarter or two. Non-farm payrolls, growth in jobs numbers, same thing, a little concerning. It's moving lower, but they're still positive, still out there. Inflation rate is going to have an effect on the interest rates, and it's still holding in the mid threes there. And then finally, I like to look at retail sales down here. Still growing. Not super strong or anything like that, but still growing. If we go over here to this is a estimate of the earnings for the S&P 500 going forward from analysts, and it gives an idea of what they think the earnings picture is going to be. Going out to here, this is the second quarter of 2025, or even further out. This goes to Q4 of 25, and analysts are saying that the companies in the S&P 500 are still going to be earning quite well. Now that can change, and they can be wrong, but generally, if there's still a good sign that those things are out there and the market's rallying, it's certainly not telling you anything that you should be concerned about at the moment. In fact, my only biggest concern is right now is on this chart here. This is the S&P 500, and this band here, the 3848. This is where the market would be if we were at 20 times earnings on the market. Below that's 15, which is what most people would call fair value. So we're literally twice, almost twice, what would be normally considered fair value, and we're certainly above the 20 level. So the market's pricing in some really serious earnings going forward, which can be a little bit concerning. So that I would definitely say that we're in a bit of an overvalued stage. Not that that's a timing indicator, but it's something that you need to be aware of, that on a large scale cycle we are at a very expensive place at the moment. So anyway, for the time being, if we go back here again, that's the weekly chart, the big picture that you want to be looking at. It's still solid. Above the trend line, staying above that all-time high that we broke. That was from here just at the end of 21. And so all signs are positive so far. So we were back invested in everything, and just let the market go, and we'll see what happens from here. So I hope this was informative, helpful. Put up here our contact information if you'd like to hear more about what we're doing in our portfolios, or if you have any questions you'd like to see addressed in future videos, please do not hesitate to ask. And otherwise, thanks for watching. We'll see you at the next update.